Okay, let's get into things. It's what are we at? 10 to 11, 4th of July. Way, Independence Day for America. So of course with that sort of US market's going to be open, sort of closed. Sorry, going to be closed today. Um, Look, that's really only going to affect obviously tonight's session. I think we can still get a little bit of flow on in that just from what happened overnight, but I think more or less we're going to probably see a fairly subdued sort of session, given everything that's just happened, and also like the reactions of it. So there's a fair bit to unpack here in that. But look, we'll start off with a bit of the data that we had. Obviously, sort of not really a great deal, a couple of bits of PMI, sort of throughout Asia and Europe yesterday. But the big one that everybody, the whole market's actually been sort of holding with bated breath for is the NFP. And this is a big sort of shocker to the upside, and actually beat on a couple of fronts here, as you can see. So look, there's a little sort of uh, fun game, whatever competition sort of thing, where sort of people put their predictions in for what NFP is going to be. And I've for a while now sort of said that ADP is a shocker indicator of what potentially you're going to be sort of seeing with NFP. So I tipped it 148,000. I mean, look, realistically, based on pretty much nothing, except for the direction. Came in at 147,000, so almost smack bang on the money for what it's worth. Anyway, I think this is actually revised up as well. So you got the previous month revised up. We then obviously beat expectation quite substantially, and it's not even the matter that it sort of beat expect. Well, I mean, obviously that is a factor of it, but it's that it's in the opposite direction because this was 139, expected to go to 111. If you look at all the big banks, I'll see if I can actually find it. Cool. Okay, so here we go. So you can see sort of like, they sort of put this out here, sort of, all the big sort of major banks and that, sort of what their expectations are, unemployment rates and that, hourly earnings, these kind of things. And as you can see, look, it's, Morgan Stanley was the highest one there at 140, but the general sort of consensus is obviously around this 100. Look, you got median estimate here of 110, employment rate of 4.3. And obviously, so this is kind of what you can expect, saying that, this is what the big players, the big guys are sort of like pricing for, expecting. And obviously, sort of when we came in and beat that, sort of with the main headline number, back to the news here, we beat that with the headline number. Unemployment rate dropped, and also the unemployment claims dropped. They're the three big ones that they were kind of really looking for. And it beat on all fronts with that. And we saw sort of US dollar sort of put in a candle that we haven't seen for, honestly, quite some time, almost in both directions. Because even though it's been selling down, hasn't been, a while back, you'd get those sort of bits of data come out, generally like, big ones like CPIs or, NFPs, FOMCs. FOMC always really gives it, but it's just like a straight rocket candle straight up and that. Yes, it got sold into, but I'll unpack that with the charts in a moment. But the point is that I think sort of this has like jobs has been the sort of the flavor of the week. We're done with the war. The war's like yesterday's news. Tariffs. Yeah, look, it's still floating there. I thought it would have been a little bit more given what happened with Canada, sort of coming into the weekend. Japan being sort of obviously topic of conversation this week. We had Vietnam actually sort of have their sort of actual sort of signed deal. So look, the tariffs are still floating on there in the background, but I think the jobs was really what people were really looking for because that's what Powell was saying. He's like Powell's very stubbornly, I would say stubborn, but stubbornly sticking to what he sort of feels. I mean, he's the head of the Fed, and he was saying that sort of like he feels that there's potential for inflation to kick up. Because of that, he's not going to cut. Then he came out and had the interview on what was it, Wednesday night? No, it must Wednesday, Tuesday, Wednesday night, whenever it was. Back which one was it? These guys here. So Tuesday night, when all those sort of Fed speakers, well, not Fed speakers, but all those head of central banks got together and had a chat, and he said sort of one of the things, hey, look, we're not taking anything off the table, as in potentially opening the door to a potential cut in July, so in 2 3 weeks or whatever, it's end of this month. Um, But the thing that he was always been saying, same with the press conference, same with his other interviews that he sort of given when he was speaking last week, or they were asking questions, whatever it was. Um, he was sort of saying that sort of like inflation may tick up. So for that, he doesn't want to sort of preemptively cut rates, exacerbate that potential problem. But he was saying that what could sway that, because that is still, and this is why I said the essays, that's still a question mark, was the jobs. So if you see, because they've got the two sides, they've got the dual mandate. It's like, you got to sort of, obviously not let inflation run out of control, but you can't do that at the expense of, basically, summarized the economy going into recession, people losing jobs, all these kind of things, which obviously then, is a spiral because, that, less productive sort of stuff, your figures drop and it goes down, down. So what they would do in that case is obviously cut to help sort of stimulate things to sort of bring that back up. So that's why the jobs were so important this week. And we got the three jobs sort of gauges coming out. So we had JOLTS, obviously, Tuesday night, Wednesday morning. That beat expectation and was a positive. We had ADP come out. That was an absolute shocker, negative kind of thing here. And then, of course, NFP is the bigger of the three. And this came out and that beat, excuse me, not only beat, but unemployment claims, this is a weekly number, that also beat, and unemployment rate actually sort of went down. So it was not only that it moved down from previous, which obviously it did, but they were expecting it to move in the other direction. So really sort of bucked the trends with things, and that's what gave US dollar a bit of a spurt up to the top side. Look, it's the thing is, it's not just it's not just the rate expectations. There's got to be something else going on under the hood in that with this, and it can't. Like I don't know. I'm not saying it can't, but to me it seems a little bit much that they're all just sort of bailing out of the US dollar due to the tariff uncertainty. Look, I get this, and I've said this a number of times that this is why I don't trade oil because it's a little bit more unpredictable. Like you can go to bed, be in a good position, somebody bombs somebody in the middle of the night, and okay, you're out of your positions. That's kind of like what Trump's doing every kind of second session. like, like I'm, as I said a couple of times, I'm a Trump fan, but in terms of this kind of stuff, it makes it very difficult, and I think that's the underlying issue that people have. I mean, you don't want to be in a currency necessarily, and then find that sort of somebody goes, yeah, bang, 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 I've got my own personal thoughts, whatever, and they do impact markets. And I think that's the biggest underlying sort of thing that is really sort of still weighing on US dollar at the moment because the CPI is down. What I mean, the economic data isn't too bad. They also had ISM out last night, so back into expansion territory. So, comparatively, and I put a post up as well because comparatively, like the data isn't that bad. The rate cut expectations are lower than their peers. I mean, they're sort of talking about now, sort of like, they have these sort of rate cut expectations, and they sort of for July moved up to like, 25, 27% or something. That's shot back down to, I think, 6%. And September, which was like, I think about 90% or something, has gone back to 69%. So, they're sort of still, I mean, now it's even a somewhat of a question on September, of course, because, August they don't meet. So, look, on all those sort of fundamental factors and that, US dollar shouldn't be being as bashed as much as it is at the moment. But it's so incredibly sour, the sentiment towards the US dollar. It's going to take more than a couple of these prints to really get it turned around. What I think this has done at the moment is put in a base. Had this come out shocking, given everything that we just sort of spoke about, sort of, what I mean, like inflation down, so, it's worth a cut on that, but the job numbers are actually sort of screaming higher, screaming lower, unemployment moving up, you know, unemployment claims moving up, these kind of things. If that data had come out, as the market kind of was expecting, then I think it really would have upped the ante for a rate cut in July, and I think that would have been nail in the coffin for US dollar at this level. So I think sort of at the moment, although it's not sort of like you know US dollar, hey, let's all jump on board and let's sort of like ride it higher. I think it's just stopped it from dying at this point, if that makes sense. So anyway, that's it for the sort of the news overnight. As I said, nothing through Asia today. We had a bit of sort of Japanese data out. Seems to be quite well. They seem to be spending up big over there in that. I don't know. Maybe that's I'm not quite sure what that be, but still certainly very much sort of spending heavy over there. Um, a bit of Euro data, nothing really to sort of ride the week out, and of course, US closed for 4th of July, so not expecting a great deal in that sort of through the end of the week. Possibly reversals of what we saw overnight, somewhat. Just got to see how this US dollar sort of fares out. So on that, we'll sort of jump onto the charts and that, and we could sort of see like this is what I've been sort of calling sort of through the week, this channel sort of breaking from this bottom here. A sort of recap of kind of where we're at with it all, if we want to start way out, is a little bit of an overshoot of this big falling support that we've kind of sort of been sort of more or less sort of respecting, all the way back through here, a little bit sort of shy of the touch up over here. But if we sort of really sort of drag this up so we've got connections here, that's close enough, good enough for me for that. And we've got a little bit of an overshoot here. So I do think that US dollar is basically, as I said, put in a little bit of a base. So, a little bit of an overshoot here, that's fine. We could see a little bit of a squeeze here. This is on a higher time frame. If you move down, we've got a little bit of a channel forming through here as well, which it obviously respected 1, 2, 3 down the bottom over here. Got pretty nice matching up, 2 touches at the top over here, meaning that sort of like, should we get a push up over here, you're going to come into a lot like, I mean, this is still a fair bit of a push up over here, but, this is about planning ahead for it all, which I do think we will get a squeeze here, which I'll get to in a moment. I think once you get over here, this is going to be a big cap for it because as you can see, you've got this higher time frame, sort of going back to Feb, so called this basically the yearly falling resistance coming in around this area. You've got this sort of intermediate channel that it's sort of coming into, plus that'll come in around the same times as those gaps. So just bear with us 1 second. So where are we at here? So let's just zoom in with this a little bit more. So this is basically the little breakout channel that we were looking at through this week. And all in all, you got to sort of take these things in context of, okay, here's this period here. Yes, we've got to take into account the fact that it's absolutely on its knees, been bashed down and that. You can't obviously ignore that. But when you're trading intraday and when you're trading sort of like more sort of short term in and out, these are the kind of moves that actually can produce little sort of flicks. So what I'm saying here is basically we've got this little falling channel. We're coming off this white, this little white line coming through here was that larger time frame channel. We got the breakout. We found resistance on point, and this is the same sort of thing. This I marked this out the other day, like sort of when we backed down over here, and said, look, you've got the support through here. I thought this may have actually cut through quicker, but as you can see, support. It's tapped into it, wiped it out, come back here. We've actually sort of retested the breakout point. So this is what I say with these sort of like falling resistances, same with the thing when they're rising, anything on an angle, basically, you can generally expect you're going to get a retest. And the retest will generally come, depending on what speed it comes at it, but a good place for a first effort of a retest is the breakout level. And as you can see, here's the breakout level. We found resistance on point, came back here, and then we sort of spun around and then sort of shot up to the top side here. So, we kind of carved through this second level here. Tried to hold it, as you can see, try to sort of turn it into a bit of a support now. So this will be an important session. If we get a drive up through here today, I think this same sort of thing we could potentially look at with this level here. Might take a little bit more to get through here. And yes, we've got some resistance as it's coming up above it anyway. But this is what I'm saying. I don't think necessarily this means, okay, bang, rockets, US dollars straight back up over 100. Obviously not. But as you can see, look at the reaction as that data came out. That was the first time we'd actually seen something like this on US dollar for a while. And this is what I mean when sort of like people say, oh, they're pricing it in. Well, yeah, that is it. They were pricing in for, a fairly mediocre level, a little bit of a cooling off, sort of more stuff coming down onto US dollar to come down like this. When it comes out shock to the other side, and beat on three accounts, this is the result that you get. And it sort of flew up here. But, it still respected the chart, still came into this zone that we had marked out, and sellers stepped in as they should. Because again, look, it's not landscape changing in the sense of like, okay, bang, they're raising rates now, but it is more in the sense of, okay, well, we're just at least not dying. And so, you've still got to take into the account this overall trend. So they are still just going, hey, look, here's another chance for me to sell it from here. Bang. But what you are doing is putting in, that's three higher highs moving through this area. Do they actually link up? Kind of. Look, I'll put it here just for now, see how it goes. Mm, no, I'm not really a big fan of that. Look, I'll keep that top line in there just for, make it a smaller one because I don't really believe in it a great deal. Let's make it this one here. Anyway. Um, Again, look, this could just be another thing that sort of potentially comes up here, depending when we get up here. Another reason for them to sell it down. Look, I think more so the gap and this other bigger horizontal would be playing its part. But anyway, I'll leave it in there just for now. I'm not a big fan of that line. Um, point being is that, okay, you still got the overall sentiment, and that's why they sold into it. Tried to hold it, bounced, dribbling along over here now. So I think it'll be a sort of crucial session, but unfortunately, with the US being closed, I don't know if we can really expect to do much. But certainly, should it find buyers, should it move back up and retest this area here again, I'd be looking up around that 97.60 to maybe close this first gap at least. And this is what I'm saying. These sort of gaps, if they don't close it straight away, they attempt to close it in Europe that same session. If they don't, generally a week or two to close these things. So I still think that these are magnets. I still think that, you know what I mean, that it did get sold into, but the same sort of thing where we saw this move here. This is when we had that ADP data out. They sold it down and they bought it back up. Now you've actually got something positive. They bought it up, they sold it back down. That's fine. There's still overall sour sentiment towards the US dollar, but is there a little bit of a potential squeeze factor involved with these things, and potentially up to around 98? And yeah, I think there is actually. So we'll see how we go. But as I said, oops, this one. So I do believe that yeah, possibly there is a possibility that putting in higher highs and higher lows now, um, there's a chance that we do see at least a cautious, call it a cautious drift up towards these levels over here before maybe we get some more data out. And I think we got CPI out of US next week, and sort of see how that goes. So anyway, let's get on to a more reasonable time frame. So this is on the hourly here. So move this alert up over here. Look, I just want to clear these wicks here because obviously, sold straight into, second effort, failed, and dribbled out to the end of the session there. I think it's sort of a move back above these wicks here, so above sort of 97.23. I mean, look, it doesn't give you much room, but it gives you another sort of 20 points up until this resistance zone here, and then breaking this level here will give us an alert as well. And this one's going to be sort of breaking NFP highs. Should that sort of come to that point there, we'll see how we go. But I do feel that yeah, we probably have some upsides. I would be cautious being so necessarily short dollars in the short term. I mean, look, you could just use this as a better excuse to sort of for people to sell into it, but yeah, as I said, I'm more of a short-term trader in that. So if there's a potential upside here and some dollar strength, I'm going to capitalize on that. So people can do what they like. But we'll see how we go through it all. I think it's sort of, look, if it does kind of come back here, I think your fail-safe line is pretty much this one down here. Let's put an alert on this one and call this one sort of, breakout, back test, whatever, support. As I said, I mean, look, I'm just marking it in case it gets there. Obviously, it's not like I sort of turn the screens off, but if I'm at the gym or something and alerts start going off, I'm not going, hold on, wait, where are we at again? So yeah, look, I think it'll find a little bit of space, a little bit of base up here, and I think there's a good chance that we potentially probably squeeze up a little bit more here. So we'll see how this one sort of plays out. Move along. We got gold. So gold actually took a bit of a whack on the bottom, on the back of that. As you can see, it was trying to move forward, trying to move forward. It found itself a nice little bit of resistance at 60. So look, I've got to clean this chart. That's the task for this weekend is to clean and get back on all on one chart here. As you can see, had a little alert set up there, but this was obviously just where it was being capped, just over that 60. So what I found actually interesting, this was that sort of bear flag that was sort of traded into the end of last week. If you take the resistance of this, and I'm not a big fan of doing this kind of stuff, but I did sort of notice that if you take that right across there, that's a pretty good sort of little resistance that we're finding along the top here. Came back down here, found buyers exactly kind of where we thought it should be. Like, and again, you just look previously, like where have the buyers been previously? Here and here. Where have the buyers been under that? Well, they've been here and they've been here. So, the fact that we sort of came up here, sort of found some buyers back here, no shocker. You know what I mean? Broke through, boom, these people trying to reclaim this level. So this is going to be a vital level for them to hold on a number of fronts. And that one, that obviously that was a big sell down there. And although sort of like, you'll see in a moment, sort of things like Aussie and that recovered 100% of their move off that, gold really just bounced a bit here and just consolidated into the end of the session and is almost doing a little bit of this, a little bit of a flag kind of thing. I'm not a big fan of that kind of thing because you do have this wick that you've got to take into account down here. But what I'm saying is that I think this is going to be a crucial line here, which if you remember, this is the big body fill line that we were using last week for the trigger for that big breakdown over here. So I think sort of like potentially, I mean, if you were to look at this in just this sort of scenario here, you'd say, okay, look, it's bounced down here, it's consolidating at the lows, you look for a continuation. So I do think that probably particularly if we do get a little bit of a push on the US dollar, that gold may sort of come back down under pressure. But again, there was also this sort of thing that I marked out on the weekend video was this potential inverted head and shoulders, which really sort of is kind of working like this, which is coming down and moving back up over here, which I think is still, look, I'm not a big fan of like angled necklines necessarily. You know what I mean? They're very hard to trade sort of head and shoulders and that. A lot of the time is sort of, it looks so good, and it's a nice pattern, but it will get really wonky on the last one. And they're hard to confirm. They're a lot harder to confirm than your horizontals and your diagonal lines and that. So call it a complex structure or something like this, I suppose, if you want to get cute with it. But the point is still the same, that you've got your left shoulder here, you got your neckline, your right shoulder. So it's just another thing that I think if you do get above 33.65, you could use that to potentially get you to where the market may want to take it. And I can't remember exactly, but I'm pretty sure it was around this 34.10 mark, from depending where you take your neckline from. And I don't use the wicks with these ones, as I've said a few times recently. That would be where you're going. So above that sort of little support resistance over there, sort of 66, that's probably where you're going if you were to look for the top side. Another argument for that could be the fact that it's broken through this falling resistance, bounced and held it, bounced and held it. So this is why I think it's going to be crucial here. But I think sort of below 33.10, the sort of kind of body fill, 33.08, below last night's wick, opens the door to sort of come down here. You'll probably find some sort of resistance support sort of around this 32.80 level again. But really, I think that's kind of more of a just okay, that's sort of a bit of a failed attempt to get a higher. And I think we come down here. I think you look for this bigger move potentially to come down here. So I think sort of if you can start your positions from sort of 33.08, if you're not already in the short side, that'd be a good confirmation level. That'd be a confirmation level underneath 32.80s, and then obviously the big confirmation one is the bottom side here, because you got to think still in this structure, although it sort of came a little bit higher than you would have liked it. Oops, you got this move here, and we're kind of in this move here at the moment. So the question is, with this, is this going to come down and give us a higher low? Is it going to give us a higher low like this and then take off, or is this? Whoop, not this one. is this going to come down here and give us the double bottom, lower low? That's kind of the leg that I feel we're in at the moment. And I just don't think this is why I was a little bit hesitant to sort of jump on any sort of gold longs at these points, because to me, this move back up here, albeit very violent, this is not enough of a pullback. This still I question how much of a pullback that is actually worth. But, we'll see how it goes. Because obviously there's a lot of, and that's the thing, there's a lot of things at play with this stuff here. People sort of say, oh, you need to sort of jump aside. Look, I'm jumping aside and, definitely I've got my bias on it all, and which is obviously potential sort of US dollar strength in that, which may sort of squeeze gold to the downside. But I'm aware of what's happening on the other side because there's obviously arguments for both sides of it all. So we'll sort of see how this sort of plays out. But look, I think if it gets back above sort of 46, then you could say, okay, this is a shakeout, and maybe you're moving back up towards testing these 60 levels. So 46 maybe on the top side here. But I would say, yeah, 46 just to be safe, because even if you break this wick of this bounce, you're coming into the bottom side of this, which is obviously resistance level. It's a level that we've marked out a number of times. So back above 46, maybe going towards 60, but probably more in the camp of potentially sort of rolling over and testing down to these bottom sides over here to sort of see if we can get a higher time frame move to sort of continue to the downside. So a little bit of a sticky one there, but certainly, look, I think a bit of a close hourly underneath 22, because if you get in on this is on the hourly time frame here, and have a look at the support that we just set up here. I think this is a good sort of early indicator. Like, you're going to fill that wick, that's fine, and then potentially get the break to the downside there. Obviously, look, you got RSI moving up here, and it's pushing up as I say this, but again, what are we in? $4 range, which is for gold recently very, very tight. You know what I mean? We've been seeing big moves. Gold, I always used to say, like, when I say used to say about a year ago, used to sort of say, and before that, that gold would move like, $5 or $6 in, maybe $10 in a big Asia session. That theory's kind of been blown out the last 3 months. But, we have been seeing somewhat sessions a little bit quieter more recently. I mean, if you look at this kind of move through here, where's Asia start here? Just here, and we're going 45, 27, so $20 kind of just, but more or less just Asia quiet. So maybe we see Asia quiet again and see what they do with it there. But I think a close underneath 20 will be your first indicator. So let's put a little alert under that. I'm just going to say drift lower, not sort of like bailing out, because it is holding this level and sort of consolidating here a little bit at the moment. So put a little wedge there. But again, look, 46, even if you break this, and that's why if you get it above 36, you're running straight into this higher time frame level in the 40s. So above 46, I would call it a little bit more of a confirmation that it's moving back up and bouncing off the top side of this thing over here. See how we go. I mean, look, if US dollar drifts lower, that's going to give gold probably a little bit of a push to the top side. All right, and onto Aussie. Look, as frustrating as hell, it is kind of following the kind of pattern. You know what I mean? Like, it's stuck at this level over here. So I say constantly, 60s and 90s always are sort of areas of which Aussie like repetitively seem to have action when they come into. And if you look where this has come to, it's pretty much stop smack bang on 90. And that's the level in which they're holding it here. So the break of this channel here, 1, 2, 3. You know what I mean? Albeit, yes, it came all the way to the top, pretty much more or less sort of come in this sort of level here where we're expecting buyers to sort of step in. So, it's no sort of like, oh my God, shocker, why are they doing it? How's it going? But it is, look, it's frustrating as hell, but it is following course. So, I would say that sort of like, as I said, if we see a little bit of a push on US dollar, we could see a bit of a push down to 65. And 65, I said at the start of the week, this bigger box, I think, is what's going to really determine Aussie coming this week. So if they put in a negative session now, and look, we've got a fair bit of room. We're on 65.72. But if they go back to failing to close above 65, which is this level over here. So if we end up the week down over here, which again, look, that's over 1% drop off down over here. So it's a bit of a big ask, particularly if the session is a little bit quieter. Then I think that's going to put it in trouble, because if you look at the weekly again, how many times it failed to get above, it tested above, tested above, tested above, tested above, tested above, got this big engulfing candle, got a little bit of a flow on here. And this is what I'm saying, this little box, you can see, I mean, this is on the weekly here, but if you fail to close above 65 again, again, it's a bit of a big ask, 70 points off at the moment. I think it's going to sort of lead to a little bit more sort of downside to it all. So look, it's come out the top here, but these little wicks and buying back up here, these are very simple textbook hanging man candlesticks. One sec. Which sort of obviously look, Aussie has been stubbornly bought up over and over and over and over again here. But I mean, as I said, look, these little hanging mats, just from a sort of technical point of view, let's drag this so we can actually see what's going on here. You know what I mean? They are sort of reversal things. So if we click on this, I mean, the bearish reversals, that's fine, we know this. Picture of this sort of something. I mean, of course, you see what you want to see with it all, but that is the idea of it all. Basically, it's basically a long body down and then sort of little shorter body at the top. They're bearish reversal candles, and you got to sort of go. Let's go back to the chart. Sort of unpack what's happening with it. They're sort of trying as best they can. They're trying their best they can. They're trying their best they can with it all. I mean, this is on the daily. We're overbought. We've got 3 setups like this. This is what I'm saying, that if it does sort of have a bearish day now, you know what I mean? And we see sort of US dollars sort of squeeze a bit and Aussie really take a bit of a bath. I think that's going to be the momentum that actually carries it back down. This is exactly what these kind of moves are, albeit on a larger scale, where it's kind of that shoot down, trap in a bunch of sort of shorts and that, squeeze the hell out of them, blow their sort of accounts, blow themselves mentally. They're sort of sitting there going, oh, look, you're getting people on the other side of this that are doing quite well if they've sort of bought, came off a sort of weekly support. And look, albeit it's worked very hard to get above the 61%, it's tried to hold it, tried to hold it, tried to hold it. If they sort of give up this line here, and this is why I said at the start of the week, I think this is going to be a big week for the Aussie, because if it's worked so hard to get above here, if they don't capitalize with this and put a big candle out the top side here and sort of go above 66, then I think it's going to subdue to the downside. We got the rate decision coming up in 5 days now as well. I think that's been pretty much heavily telegraphed for quite a while now, so it's no sort of real shocker. But you got to sort of weigh these things up, particularly with this. This is against the US. They're questioning. I mean, July is pretty much off the table. Questioning September. They've only got, I think, two more rate decisions after that. So maybe a cut this year, maybe 2 cuts this year. Whereas, RBA, I think we just actually had something out a few minutes ago. Yeah, so this is I mean, look, it's just a poll, but still, pretty much sort of like, high sort of guarantee, 31 out of 37, which is fair enough. If they said 37 out of 37, I would have been more cautious on it. But, sort of 31 out of 37, pretty much tipping a cut here. And you could see that because, I mean, realistically, the inflation's obviously sort of well down for us as well. Let me just jump back on the charts here. So look, we'll see how we go with it all. At the moment, as I said, it's overbought on the daily. It does look like you've got 3 hanging men in a row. I think certainly if you take out that wick from yesterday, like that little last ditch buy up effort there, which is at 37, pretty much right on the money, the top of these wicks that we had previously sort of marked out. I think if you take out that there, then you're looking down at that sort of round number, like, 65 to 65.10. This is the next level, and this is what the plan was: 1, 2, 3. So we'll see how we go with this. Let's get onto a lower time frame. And this is what we're saying here. So yeah, I mean, obviously a little short term underneath 60s, but I think really, if you want to sort of see something confirming sort of a bit lower, this is an area in which, the market obviously held it for that last little push up, kind of tested here, give or take, what's this, like 3 or 4 points or something in it there. And I think sort of come down here. This is also, if you look at these bounces as well, each one of these bounces coming in, that's, 3 bounces there, or 3 highs coming in lower, lower, lower. So look, this can be negated by a push out to the top side. Push up above 60, 65.90, but, call it above 66, then it negates that and pushes up to the top side. But to me, I sort of feel that we've probably got a little bit more sort of cooling coming here. This is 4 hour, and this bounce coming up here, very weak. I mean, look at this RSI here on this bounce back up over here. And the thing is as well, I think this traps a lot of people. A lot of people sort of get in the idea of, oh, look, I'll buy the dip, I'll buy the dip, I'll buy the dip. Well, eventually, they're not gonna buy the dip, and people are gonna sort of add to it. It's going to dip a bit more. They're going to add to it. It's going to dip a bit more. They're going to add to it. And that's okay because that's going to feed a move to the downside. Obviously, look, we need to actually see that eventuate to begin with. But the general idea with lower highs moving through here, we're getting lower lows. You know what I mean? It is consolidating near the highs, so that's a bullish case, but you need to sort of actually capitalize on that. And with the rate cut coming next week, Fed looking to sort of cool off a little bit, I think that there's probably more risk of a downside move here than seeing this thing explode out to the top side. All right, move along. We've done gold, silver. Silver got the breakout backtest. Beautiful for them. As I've said, I've been on the sideline for silver for a while. I thought maybe you could see this little head and shoulders, but this is what I'm saying. Apart from the fact that it has super wonky neckline kind of thing, look at how strong these buys were down here every single time. Look, I'm still not convinced that this thing's absolutely ripping to the moon. I do think that this could still roll over a little bit, but what we're sort of seeing at the moment is that obviously this little falling resistance, it's broken it, taken out these highs, come here, back tested, and sort of moved up here. I think topside moves possibly to sort of go up here and test this level. There's a 14-year sort of wick high levels. So I think this could sort of see a little bit of resistance should it move up to over here. But as I said, I'm not really interested in silver. I missed the big move up here. I didn't want to trade this chop. And I think honestly, I've had enough headaches with Aussie recently. I think that's a good thing to sort of step aside on this one because that's what I said. Look, I mean, yeah, you're getting pretty it was a solid move through this area here, and there's still a buck to play with here. But I think sort of the bigger move's going to come once you either sort of confirm above sort of 37.50 or confirm underneath 35. So I'm happy to still sit on this one for the time being here. So we'll see if this move comes up over here. I'd still prefer to trade this. I think there's probably more downside move than there is potentially upside move in the short to medium term. Move along. This is the most important chart, I think, at the moment, for me anyway. If you look at this, I mean, it's such a snoozer, but this is such a nicely defined, whoops, get rid of that, nicely defined wedge. Obviously been trying to get onto for ages. Boom. I think this is going to be a big indicator, and this is another factor of why I'm sort of saying that, look, you got a negative divergence, you got a sort of a falling wedge. It's not been able to get out of its own way for quite a while now. Should this thing break to the top side here, you got DXY sort of squeezing up a little bit and those sort of things. But should this break to the top side here, I think this is going to have a big player factor on Aussie as well, because Aussie's been holding up. I mean, obviously we're a bit of a proxy for what happens with China. There's other factors obviously going into it all, but that is one sort of the pillars that kind of hold Aussie up. The fact that sort of we have China sort of if China's doing better, it's going to help Aussie because, if they're doing better, they've got more money to spend, they buy our commodities. That's all we do here. We don't have really any other sort of we got little parts of industry in that, but more or less we're a commodity sort of nation, we're a commodity currency. And China's our biggest sort of purchaser. So if they're sort of if they're doing a little bit better, or, what I mean, if we're sort of seeing the US dollar against the Yuan weakening a little bit better, so weakening a bit more, that's going to sort of detract from Aussie strength, if that makes sense. So in this chart here, you got US dollar against CNH, so against Yuan. Moving down, Yuan strengthening. Aussie, stubbornly strong. Should this start to move back this way here, well, that's obviously showing a weakening of the yuan, which obviously I think will flow on and potentially put a little bit of a handbrake on any potential breakouts with Aussie. Look, this could still, it's still inside the thing and it could still break down to this bottom side over here. But I think despite this long-term sort of resistance support sort of coming up through here, I think the negative divergence through here, the bunch up here, I'm still looking for this thing to break back up onto this side here with a little bit of sort of US dollar strength sort of coming through. But I think this is an important chart because I think if this breaks, this will be a good indicator that then can flow across to a couple of other bits and pieces. Obviously, sort of got the alert set up here just to sort of get back into that range 718, but really above 720, that's when you're going to sort of confirm that stuff a little bit more, I would say. Copper, another one here. Look, it broke out quite well actually yesterday. Where we are here. Look, it sort of moved to the top side. Where was the video we did yesterday? So it was about here or so. And this is what I was saying about copper. Like, all unbelievable strengths, all the best 80 bows traded, well done, yada yada. To me, it's just too high. It's too high to buy. It's too strong to short, and I'm kind of still in that belief at the moment. This kind of obviously sort of area was a bit of a sort of resistance, tested above it, retest, bang. It's trying to hold this zone here. Above 722, let's just call it continuation. Needs to get above those highs over there. And at the moment, it's potentially in back test to do that. Should it break down underneath? I'm not really interested till it gets underneath 501, 5, whatever, this kind of area over here. Any dips down to here could easily just be bought up and made into a little sort of consolidation period. Call it like that. Little breakout box. I think that's going to give you a direction. And till it's outside of this, I'm not really interested. I mean, look, it's one of those things. You don't want to buy it here. Well, yeah, you're going to buy it here. Probably not, but there's probably a good chance, though, I would say, should you break out of this box, this box here, as you can see, the boxes that we've had sort of slowly moving up, should you break out of this box here, there's probably a good chance you go up and you test those all-time highs, which that's an argument for probably a little bit more strength with the Aussie. But we'll see how it goes with that. But again, I'm kind of on the sideline with this. Same with silver. Silver under 35, copper under 5. Maybe I'd prefer to sort of trade the downside. But we'll see how we go with it all. At the moment, they're really just sort of on the back burner for me. All right, that's it from me.